Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market alert for Friday, December 2nd. The biggest item on today's agenda is the government's November employment report. Investors are still digesting those numbers, and we'll bring you the results and the market reaction after the opening bell. Sentiment on Wall Street has been rising recently amid a stream of data showing modest improvement for the U.S. economy. Earlier this week, payroll processing firm ADP reported that private sector employers added 206,000 jobs last month, a much bigger number than expected. And the Conference Board's reading of consumer confidence posted a huge increase to its best reading since before the debt ceiling debacle and the downgrade of the U.S. credit rating in August.
Ahead of this morning's employment report, investors' attention was focused on Europe. German Chancellor Angela Merkel told the country's parliament that she supports quick treaty changes that would pave the way for a closer fiscal union in the Eurozone. French President Nicolas Sarkozy also pledged to present proposals for coordinating budget policy across all 17 member nations at next week's summit of European leaders in Brussels. Merkel and Sarkozy will meet on Monday, ahead of the summit, to discuss the proposed treaty changes. Meanwhile, European Central Bank President Mario Draghi hinted that completion of a new fiscal compact by EU leaders could clear the way for more aggressive action by policymakers to combat the sovereign debt crisis.
Those remarks by the ECB are helping to reduce borrowing costs in Italy and Spain. Yields on their government bonds have been hovering at levels that many analysts view as unsustainable, amid doubts that the countries would be able to meet their debt obligations. The prospect of a tighter fiscal union is also boosting the euro this morning. It's now back above the 135 mark against the dollar. And the dollar's relative weakness is helping commodities. Right now, crude oil is gaining more than $1, trading above $101 a barrel, and gold is jumping to $1,760 an ounce. We're also seeing investors move out of U.S. Treasuries. The yield on the benchmark 10-year note is rising well above 2.1%.
On the corporate front, one of the day's big stock decliners is likely to be Research in Motion. The maker of the BlackBerry smartphone said that it will fall short of its profit target for the next fiscal year because of lower unit shipments in the fourth quarter. The warning is sending RIM shares down nearly 5% in the pre-market. And finally, we have a new initial public offering to tell you about. Online games developer Zynga is planning to sell 100 million shares at a price between $8.50 and $10 each. At the top end of that range, the maker of the Farmville and Mafia Wars games would be worth nearly $7 billion. Zynga expects to begin trading on the NASDAQ under the symbol ZNGA by December 16th. That's the latest from Weiss Research. We'll be back after the opening bell with the results of the government's employment report and all the market reaction.